Today we are doing the Medley industrial submarket where we have 981 properties in that area, of which right now we have actively for sale, 19 actively for sale, and we have closed on 12 in the last 3 months. As far as leasing activity, we've got actively 106 properties or spaces for lease and 27 that have been leased out in the last 3 months. Again, you can see here that the current lease rate right now is at $18.63 a square foot. That is up slightly from last year. What has happened there is that a lot of people are coming out of long-term leases. You can see that little dip in the line right where we are now. And people coming out of a 5 or 10-year lease, depending how far back they went, they could have been sub $10 a square foot. So in today's world, if they have to consider releasing, that would mean that they're paying double what they were paying before in their leases. So again, it's something that they really have to think about. Is now the time, and this may be an opportunity to consider purchasing a property, especially with all the benefits of purchasing. Now that being said, the dollar per square foot is at $256 a square foot. As far as the activity there, again, the expectation is that these are going to stay flat for the next 3 quarters, so that's going to take us into the middle of 2025. So again, if you're thinking of expanding, if you've got that some additional business or first time in business and you need that space, now would be a really good time to consider it. That, and the Fed, I believe, is expecting to lower the interest rates another quarter. So somewhere along the line, we're going to see those interest rates, those mortgage rates drop. Again, another reason to start considering it. As far as the cap rates, we are at 6%, and those are up slightly from last year. The expectation is that they'll pretty much hit the top there. They're going to hold firm again until about the middle of next year, which coincides with the price of properties going up again. So at some point, cap rates will start to go down. As we know, they're inversely related. Now, the bulk of those trades were somewhere between 4 and 8%. The other opportunity that I'm seeing here is that there were roughly 55 properties that sold last year, of which 23 were listed. That means that more than half of the properties that sold were not on the market. And as we know, most of those properties tend to sell for 20% less than, that's an average, 20% less than what the market calls for. And I have seen this myself firsthand when one neighbor sells to another neighbor, only be out of convenience to lose a significant amount of money. So if you're thinking about selling and you'd like to know what your property is worth, reach out to us, give us a call. We can run a market analysis for you and let you know what your best pricing is and what's the best way to get the most dollar for your particular property. Also, if you'd like to see something else on another market or another area, reach out to us, let us know.